Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently with the price action and what we would think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's make a start with this one though. So here we have Bitcoin paired up with USDT on the hourly chart, and Binance is the data source. So as you can see, yesterday we did actually start to have a little bit of a pullback to the downside. Our expectations are that we come down into this low range of 22,857 to 23,289 before we have another surge upwards, maybe possibly towards the $27,000 to $28,000 level. Now, it's not a guarantee, but it is an interesting zone. If I just zoom out here, you can kind of take a look at this with that move to the upside. For your HTF liquidity on there, you can kind of see a little bit, specifically more around the 25, and there's a little bit around the 26.9 and so forth. So it'll be interesting to kind of see how that plays out. You can also see that the low expectation also has no liquidity in it. So that'll be interesting to kind of see how that kind of goes out as well. From an order block point of view, there is a sell order block at around the 25,500, and the buy orders are down here at 21,000. Although I don't think they're going to be overly too impressive overall, as the order blocks on the larger time frames are in slightly different positions. So essentially, yeah, it does look quite interesting from the structure. We're looking for a little bit further to the downside before a move to the upside. Although it is no guarantee that we move down before we move up. It does look like we are still in a ranging market, basically bouncing between the high of 25,250 and the low, which is down here at 23,339. Essentially, what we're doing at the moment is basically just rallying and dumping between these key levels, and they call this a ranging market. You're ranging between two key levels, and you're just going to continue going until you get a break upwards or a break downwards, and you kind of then start a directional move. Essentially, it does look like it's only a fractionally lower than this existing low at 23,359 that we really have to come into for an ABC or WXY structure down here before we can then actually go up into what I would expect to be another 5-wave structure to the upside. Okay, I would be expecting something to this effect just in here to take us up into that range, which will then marry up with our 5-wave structure here, making the entire thing an A, B, C structure in total. So that's kind of what we're expecting. That hasn't changed. It's just a bit slow on this ranging market. Maybe today we'll finally actually be able to break either upwards or downwards and complete this off. Now, I say it could go upwards. It's because we could have already done a 5-wave structure. And I say could have, it's not a guarantee because it doesn't look like the best structure in the world because we have that kind of move there, that diagonal based structure there. So it's possible that that is 5, or it's also possible that it's just a WXYXZ. So I'm holding out to see which way this actually goes. Essentially, in ranging markets, it's best not to get too involved and just wait for confirmation of the direction and then jump in whatever move you need to from there. So for example, if we were to break higher than 25,250, we could either go long or we could wait for this to complete and then go short, right? One of those two options. If, of course, we break down, we come down into our yellow box area at the bottom, which is my expectation, then, of course, we can go long from here and, you know, we can ride that next move to the upside. So essentially knowing that we're in a ranging market can be beneficial, but you have to have patience and wait for it to confirm the direction of the move before we want to jump in. But it's probably worth noting that I'm not a financial advisor, so I can't give you financial advice. All I can do is give you my thoughts and opinions on the data and the charts as I see it. So that's kind of Elliott Wave theory. We're kind of looking for a bit of a move to the downside and then a bit of a move to the upside. Expect volatility. FMOC today, so I imagine there's going to be some kind of volatility around that, and yeah, so keep an eye on it. Now, from a smart money concepts point of view, when we take a look at this through a slightly different lens, what do we see? Well, we can see that we are below the equilibrium now. We fell straight through it, we back tested it, we got rejected, and so forth. So this is an interesting point. Now, the interesting part of all of this is that we have a pretty clean move to the downside. It's quite choppy, but it's just looking like a singular wave at the moment. Okay, so even like if we were to take a look at it from a smart money concepts point of view, where we come down lower than equilibrium, we probably have to come back up into this fair value gap here at some point before maybe even coming back down again. So we can kind of see Elliott Wave theory also aligns quite nicely to what is going on here. Now let's just break this down. We have got a premium area at the top and we've got a discounted range at the bottom. Okay, and these are basically between our ranging markets area, right? We've got the 23,359 and the 25,250 at the top, right? This is our ranging market right in here. Okay, and we can see that we have the premium area and that we have a discount area, both on the high and at the low area. Then, of course, we get these little green areas just here and these little red areas just here. Okay, these are essentially the demand, and the green is the demand. Okay, and the red is the supply. Okay, so if we think about it this way, this is where your sellers are, and if we think about what's down here, this is the buyers. Okay, so we're approaching the area of the buyers, so we can potentially pull back down just a little bit more, come into this range, maybe even hit the discounted area. This is currently a strong low, so that's a good sign. That basically means that it should probably hold up quite well. And we have a weak high. Even though that we are now below the equilibrium, it does still show us as a weak high, which is a positive. So it does look like we still have progression upwards here. And considering the stochastic is oversold on the 1 hour, the 4 hour, and the 8 hour, that gives us a little bit of hope there. As I said, though, we could just be looking at some kind of three-wave structure, coming back in and touching on this imbalance, which is up here. The imbalance is basically showing us with an institutional candle coming down, and we can kind of see that this gap was left behind, this fair value gap. This is an imbalance in the order books. Basically, too much selling occurred, no one was buying here, and price just tanked all the way through it. We can see that we did come up a little bit, but we still left this minor gap behind. Now, if I zoom out just a fraction, you can see, of course, that these institutional candles this side have also left behind some of the fair value gaps, right? The imbalances in the order book. So chances are that we do have to come back down and refill those. And that's again, just around 22k, and we can kind of zoom out and we can kind of take stock of all of this. Now, the big positive on the price chart for Bitcoin here, at least from a smart money concepts point of view, is that we've had this change of character. Now, although we've had the change of character, we haven't got a confirmation of a break of structure to the upside yet. Okay, so that would happen, somewhere a little bit higher in the price chart, and we would end up with a break of structure. At the moment, all we've really done is very similar to what we kind of had over here. Okay, is a change of characteristic that was printed, but we didn't get a break of structure to the downside. So although we came down a little bit further here, we had some minor break of structures. We didn't actually get that kind of confirmation on a bigger scale that we were going down further. Instead, we rallied up. We got the change of character to the upside. So what we're looking for is we're looking for these break of structures to kind of confirm that we are moving up in a big way, which haven't happened yet. So caution a little bit there. Now, as I kind of zoom out even further, you can kind of see all of these key areas down here, all these gaps that were left behind, all the way down at 17,000, 18,000, 19,000, 20,000. There's a high probability that these would eventually have to get filled. There's even one all the way back down here at 15. So just be aware that we've left a lot of these gaps behind, and price loves to go ahead and fill them. Most notoriously we saw was the 2000 and I think it was 19. Might have been. Sorry, no, it wasn't. It was 2018 or 17, in fact, where we had the $20,000 high. We smashed through those targets. In fact, I can bring this one up in here on our daily chart. We left this gap behind right up here at $20,000, right? So we left this gap right here behind, and we completely left it, and everyone was feeling like really bullish, and no one thought it would ever come back down into the gap that was left behind down here. And then, of course, in June 2022, what we've gone and done, it was 2 years. It took 2 years to come back down, but we've gotten down into this fair value gap. Now, when we take a look at everything that's going on our chart now for Bitcoin, we've left all these gaps behind. We're not saying that you have to come down immediately, but there's a high probability that you come back down and you fill those gaps, even if it is in the next bear market. We'll keep it in mind that these gaps that have been left behind, price does like to come back down and complete them. Not a guarantee, but something that we've seen over and over and over again. So in terms of everything that is going on from a macro standpoint, we can of course see that we had this WXYXZ coming down, WXYXZ going up, potentially still a little bit more room to the upside. I've said it before and I'll say it again, the biggest concern I have is a big A, B, C structure taking us down into those lows. But first, before that happens, we have to rally up higher. And, around $32,000 would be kind of a big key indication to see whether or not we are going to be super bullish or bearish on a bigger macro scale. And it wouldn't surprise me if this rally to the upside is going to basically give us that indication that we end up going down again, because there are some altcoins out there that show us with a 5-3-5 pattern. We've gone 5 down, we're going 3 up, and then we go 5 more down into new lower lows. Bitcoin's a little bit not so clear because we don't have a clear trend-based structure. We just have a WXYXZ structure, which mimics that of an impulsive movement to the downside. So people do think that it's going 5-3-5 to the downside, but that's not really what's going on. So it does look quite interesting when we take a look at altcoins that are trending to the downside and are only halfway through their trends to the downside, that Bitcoin could potentially be on a similar journey, just without the impulsive structures that we would see on some of those alts. So it's going to be interesting to kind of see how this one plays out. Overall, I'm confident long term on cryptocurrency. I will be adding more and more to my positions over time. And yeah, it's one of those. I do think we're going to see some interesting volatility today. I think we'll see continued increased volatility and unfortunately decreases in price action across the rest of 2023. But let me know what your thoughts are down in the comments below. I'm going to wrap this one up right there. If you have found it useful and informative, smash the like button. If you're new, subscribe. And if you haven't yet joined us in Discord, check it out. Linked in the description below. Until the next one though, guys, have a fantastic day.